Hello traders out there in Traderland. This is the weekend edition. My name's Dez here at Grok Trade. This weekend edition is good through June 10th, 2012, and we just had the best week we've had all year in the markets. And that's on the heels of one of the worst weeks we've had in the markets all year last week. Big pop, so let's analyze the markets here. Before we get into this, let me show you what happened on Friday. We took an early dip in the morning and then took off to the moon there after closing near the day's highs. Dow up 93 points on Friday, up 0.75%. The S&P up 0.8%, up 1% here on the NASDAQ. And Russell's up more than 1%. And we have the banks leading the markets virtually all day. Early in the session, it was lagging, and then it took off ahead, but up 1.3%. VIX down 2.2%. We're still above 20 here. Gold squeaks out being in positive territory. Silver is still under. And you have crude oil up 0.25%, and the US dollar up 0.31%. What's interesting here, we're seeing a correlation here of the US dollar rising along with the markets rising. So that is something, if you have an opinion on that, love to hear it down in the comments. All right, the trend closes at 0.94. Transportation index beating the Dow, and that shows relative strength in the Dow. But the defensive sector, utilities, we do see bullish activity there, which would not necessarily be expected with a bullish run here. All right, let's take a look here. What we're seeing at the S&P daily chart had this nice falling wedge. And I thought, you know, on this day here, on Thursday, I thought we'd probably see selling coming into the strength. Sure enough, we had that closing back down below the 20-day moving average. But today we did go lower, finding support at some of these EMAs, my 11 and 13 EMAs, or my 8 and 11 EMAs. And then we shoot back up. Now this is really nice because we have a nice up leg here, busting through a lot of resistance and giving us a confirmation that we have a breakout taking place now above this rising wedge. So the next area of resistance would certainly be the 1332 coming across right here. So it'd be something to be watching for sure. If I go to a weekly chart, let's take a look at this. Had this big run, boom, 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 and we draw down. What's interesting here is we did not get down to the 61.8 Fibonacci level. We're finding support here just below the 50% Fibonacci, and we rally back north nicely. The MACD, we do have a crossover with a big, healthy, positive tick on the histogram. We have not made a higher high yet. The question is, will we continue higher? And as far as I'm concerned, it looks like we certainly do have that opportunity. Now listen to what I'm getting ready to say here on the monthly chart. This is arguably the most important thing I'm going to say, just shy of what I'm going to end with at the end of this video. This is a monthly chart of the S&P 500, which is deemed the most relevant index out there. Has 500 blue chip companies out there with no real bias one direction or the other. So far as a barometer is concerned, it is a dandy. Now, let's pay attention to these levels. I'm going to move this line for the time being. You can see two higher swing highs, and we have a higher swing low. We bring those two lines together, we have a rising wedge. Going back to 2007, we have this major trend line coming down, connecting in 2011. We bust through it here. Now that dude's acting as support, which happens to be right where the 20-month moving average happens to be at the same, where it just happens to be connecting also. We're just getting into the start of June here, but already we have a hammer. This hammer is forming on a rising 20-month moving average and a major trend line coming down. So that allows me to bring this dude back up, because this could be our next area of support. If it starts to bounce here, we will now be in an even tighter rising wedge. So here I could see the next couple months actually going higher, believe it or not. Now, here's the problem with where we're at in the month. We're at a trend line here, and you see this drawn. It's a parallel line with my major one going to this shadow coming down. that is serving as resistance right now. If the markets start to drop next week, that could be our high, and then it could become a bloodbath. So next week, this coming week, gang, is huge because we're at this major area of support. Are we going to snap that and start heading southbound, or are we going to bounce and head north? So if we do start to head north, I could see the next couple months being bullish, if not the next 3 or so. Then I could see us stalling at 1422, which would be about where this upper trend line is, and that would give us a double top. And then I could see bad things commencing right after that. So this is huge. I would say if we get below, I'd say 1292. If we get below 1292, it could get slippery and fast. So I'd put alerts on your trading platforms, but that 1292, or if we get below 1290 even, 1290 or lower is dead man's land, and things could get hairy and fast. However, we start to pop north, say if we get over 1340 area or higher, we could continue to move higher there for a while, but we're still not out of the woodwork yet because we have this big rising wedge here taking place. Now, there's some ominous news that's just coming out right now. They're saying that we as the nation here in the US could have just recently entered into stagflation, which is one of the worst economic conditions any country could be in. And some are saying that the United States just entered that. If you go back in history, you'll see that stagflation has been responsible for revolutions and uprisings in developed countries around the world. Now, you're seeing a lot of this taking place in Greece and Spain and Portugal and so on and so forth. And it's a dreaded thing to be in. Stagflation, a lot of people are like, what is stagflation? Stagflation is simply defined by high unemployment, low economic growth, and high inflation. And we certainly have all those. It makes inflationary and deflationary periods look like a walk in the park. Stagflation usually results in very long, severe recessions. And part of this I read from an article that just broke today. And that came from Ed Butowski, who wrote that. So thank you, Ed, for that write-up. And that could be very sobering. Now, if we continue, we get some of this QE3 talk going, we could get a nice little pop here, but then it could get hairy and fast. But wow, so this is something that we're taking very serious and we're watching quite closely. If we go to the NASDAQ, this is the monthly chart. We have a hammer above the 20, but major support there. Again, this thing is poised, ready to head northbound, but 3134 would be a target area before the thing rolls over if we can get up there. Now, on the weekly chart, big engulfing pattern at the rising 50-week moving average, big resistance coming up around 2900, so be watching that. On the daily NASDAQ, we had this falling wedge. We broke out, and we're finding nice support at 2819, 2820 area. And it looks like we could certainly be heading higher on the Russells, which is small caps. Falling wedge, we broke out. We're finding nice support. Looks like we still have room. We can move northbound. On the weekly chart, we have a bullish harami, but we're above these moving averages here, but we're still in the confines of a triangle. So we have big resistance here around the 780 mark. And then on the daily here, falling wedge, we pop above, and that's where we're at. Actually, I did the daily. Let's look at the monthly. Monthly, we have big support at 748 coming across. We did initially go down for the month, but we have now come back up, giving us kind of a doji thing, but we're below the 20-month moving average, so we're in the confines here of moving averages and a symmetrical triangle, and that's something we're watching for. At this moment, I see that gold is below 1600. We are at 1591, 1592 right now for gold. And we have the oil at $84 a barrel at this moment. Let's take a look at GLD. Let's go to the daily. We had this little, I should have redid these. Look at this. Got a nice little triangle taking place here. Boom. Now we'll pull back. Gold looks like we could be ready to rally here. It has a nice little pullback here, trying to fill in a gap, and we could get a rally. So be watching for a rally. See what the weekly looks like on GLD. A little pullback here at a major support area at 151, 152 area. I could certainly see us going higher here. And and on the monthly, see, the monthly is what's problematic. Even if we do rally, I see this major trend line being being a major issue for us. So as far as the monthly is concerned, gold is in major trouble. This is Apple on a daily. I know I have a lot of lines here, but Apple right now is above most of them. So a little bit of resistance coming up, but Apple's looking pretty strong. But we are in a rising wedge here, and so that could get bearish on us and drop. You'll see on this rise we have a decrease in volume, so that's really no good as far as Apple is concerned. Apple had this beautiful bull pullback, but this little pop is not selling anybody on we should be entering this. It should have just took off. We should have been over 600 by now, and we're just not seeing that. And while we're here, everyone's talking about Facebook, so we'll do the same. Here I almost wanted to go long Facebook today when we popped up over 27.51. However, we did not sustain that, so I'm still not in this yet. It's actually giving us what's called a bear pullback. A little pop here, and then another drop could commence. You know, get something around $22, which would be about half price from when we got up here around 44. If I could get it around 22 here, wow, that would be a screaming deal. I just don't think it's actually going to get there. On the weekly chart, what I do like is we have this drop with a nice doji. It looks like it's wanting to rock and roll to the upside. The drop with decreased volume. It'd probably be worth going and watching this video a second time, and make sure you click on full screen to watch these videos, because you can see everything in high definition. Make sure you leave a comment or click like down there, and certainly share us with a friend. Let everybody in the world know about freeonlinetradingeducation.com, or keep it simple, freetradingvideos.com gives you the same place. But Finviz, our friends here, they do this grouping. Let's take a look for the week. Financials did the best, so that's very good for the markets, for financials be leading the charge as far as the sectors are concerned. For the month, utilities, which is very defensive, they were doing extremely well so far for the month, but basic materials and financials doing horrible, which isn't so good. And for the 3 months, basic materials in bright red, down 14%, financials down 7%, utilities doing strong, healthcare. These are all defensive things. But far as the week is concerned, financials are finding their legs and they're bouncing back, so that could give us more bullish activity going into the near future, but I think that that will be short-lived. All right, the most important thing that anybody should do is quit losing money in the markets. Capital preservation comes before making money. The biggest mistake that traders make is allowing their accounts to draw down so far that they have to quit trading. They wash out of the markets, opposed to investing in the right trading education. You have to get formalized trading education to have a fighting chance out there. I would put my Grok graduates against any other traders out there. You certainly want that edge. Last call for the mentorship there in Vegas. It's a few weeks away here, and if you show up, you can bring a friend, and we would love to see you. We're actually doing one next weekend. You can do it from the comforts of your own home. That is done online over a Saturday, Sunday, and a Monday on starting June 16th. If you want to do an online one, that'd be great. We don't take everybody. There is an interview process. We have several questions that we ask to find out if there is a match. If you'd like to do an interview call with Carolina, let us know at mentor@groktrade.com. Take care and very safe trading to you.